Good afternoon and welcome, everyone. My name is Jason Murphy. I am the founder and CEO of Chase Retail and Consumer Goods. And for those of you who don't know me, I've spent the best part of 30 years helping consumer goods businesses solve for some of their hardest commercial planning and revenue growth challenges. Now, before I introduce today's session, let me make you one promise. We're not going to try and sell you anything for the next 45 minutes. But what we are going to do is tell you what we would do if we were sat in your seat right now. The title on your screen is a question we are hearing in almost every commercial leadership team we speak to. The volume is gone, now what? And for several years, pricing did the heavy lifting on revenue growth for us in our industry, but unfortunately that era is now over. And today is all about what comes next and about the route to a 360 degree of your business in 60 days, not in 2 years' time. Now, I'm joined today by two people who've lived this challenge from very different angles. First, I'm joined by Mark Jagger. Mark is founder and CEO of RGM-EX, and Mark has spent his career leading commercial and revenue growth functions inside some of the biggest names in our industry, P&G, Reckitt, Sanofi, all of which he did before he founded RGM-EX. So when Mark talks about the broken pricing model, he's talking about it from the inside, where those decisions were actually made, and he's got the scars to prove it. And I'm delighted also to be joined by Thais Sequeira Gomez. She is the head of revenue growth management at Danone in Brazil, and one of the largest and frankly one of the most complex consumer goods markets anywhere in the world. And Thais brings the operator's view from the front line of what is the equivalent of a €1 billion business. Mark, Thais, wonderful to have you both join me today. And one just quick piece of housekeeping for everybody on the call. You'll see a Q&A window at the bottom of the screen or right-hand side of the screen. And any point you have any questions today, drop them into there. We've got time specifically at the end of this session to answer those questions. We'll try and get through as many as we possibly can. If you ask a question and we run out of time, don't worry, we will come back to you over email afterwards. So with that out of the way, Mark, let me hand straight to you. Now take us back. How did we actually get to where we are today?
Hi, Jason. So firstly, good afternoon. Hope you're well. Glad to be here today. Look, I think, as you said, the volume is gone. I think for the last 30 years, really, FMCG categories have been in a fairly standard, consistent, organic and healthy, sustainable growth pattern of around 2 to 3% pricing every year, along with 2 to 3% organic volume growth. But there's been some significant changes over the last, let's say, 5 to 6 years, significantly that are really impacting various things, and we'll go through those now. Some I think you guys, who are on the call will definitely understand and recognize, and some that probably are a little bit different. But it's certainly the biggest challenge I think that's facing FMCG companies today. First of all, I think we all know, we spoke about the COVID impact where we've seen significant cost bases being driven upwards, and really that has continued to be exacerbated by various wars that are happening across the world right now. So we've really seen significant cost increases, which have pushed prices higher and higher and higher to a point where it's impacting consumer value. So I think that's the first thing. We've really seen consumers choosing to not necessarily trade down, but trade into other categories and make commercial choices with their spends. And so we're seeing, as you can see on the chart today, that significant drop off in volume that we've got in the UK in comparison to consumer goods pricing. That's really the first factor, which I think a lot of people are very, very aware of. I think the second thing that's really important is that in that period of time, FMCG companies have really wanted to start to be valued at significant multiples in a similar way to tech companies. And what that's meant is there's been a huge amount of profit pressure that you can see right now happening in the market with layoffs and all this pressure around pricing. So I think that's impacting consumer goods decision-making processes. And then I think the third thing that's really, really important is that change in consumer behavior. We have seen significant changes with consumers choosing private labels, but also private labels moving from being that cheaper alternative to genuinely being a quality product. In the UK, 92% of baskets have a private label, premium private label product in them now, and they're growing at 9%, so significantly above the UK market average. So I think that combination of changing consumer behavior, where consumers are looking for value, personalization, which is being delivered by small brands, the shift towards premium private labels is really, really exacerbating that price volume equation. And I think finally, RGM teams actually lack a bit of a plan. We were always told it's price and promotion mix and maybe a bit of portfolio work we can do. The reality is we should be looking at our business in a different way. We should be looking at it in a 360 way. RGM teams need to be fully integrated. I think we're going to talk about that much more over the course of the call, Jason.
Thanks, Mark. That's great. And for everyone on this call, these are not abstract points, right? Particularly when I think about the UK and Ireland, what you just covered there is exactly what this market has been living through, particularly in the last 12 months. Squeeze coming from both ends at once, really. One side you've got the discounters, Aldi, Lidl, probably taking up close to about a fifth of the British grocery market right now, and still the fastest growing names out there. And as you mentioned, Mark, we've got the own label pressure, and increasingly that premium own label, that sort of ground where brands were particularly strong and they used to own outright. Now no longer the case. And in Ireland, it's even sharper, frankly. Grocery inflation running somewhere about 6%, own label growing right across the bracket. So, if we put that into context, if you're an RGM lead at a, say, 50 million to £1 billion business, you're fighting a discounter on price, a retailer on own label on value, and a long tail of small, fast brands on relevance. And you're probably doing so with a team of 1 to 4 people with data scattered across 4 or 5 systems. And that's exactly why we put this session together. And this is exactly the audience that we want to talk to today. Right, now let's talk a little bit about Brazil, because complexity, Thais, this is exactly why I wanted to bring you into this. Commercial complexity at full volume, you've got to look at Brazil. So Thais, wonderful to have you give a view from one of the biggest, most complex markets on earth. So before we get into the RGM topic specifically, could you just help paint a picture a little bit about what the trade environment in Brazil actually looks like day to day?
So good afternoon, everyone. This is a pleasure to be here. So talking about Brazil, we have a lot of complexities. The first one is that Brazil is a continental country. So we have 26 different states that has different taxations and different logistic complexity. So here our cost is really high. We are a country made by trucks, not by ships, for example, and trains. Otherwise, we have also our route to market that is really different from other countries. For example, our distribution part is really segmental, and fragmental. We have cash and carry regionals, cash and carry nationals, key accounts regionals as well. We have last mile delivering our same products in the house of the customers. We have different taxations perspectives. So 26 different states with 26 different taxations that reflects different pricings. So you can imagine putting different channels, crossing this with different taxations. So we have more than 100 tax price lists that you can imagine. And also we have enormous competitors here in Brazil. Especially here in Brazil, we have a lot of milk productions. So you can imagine for Danone that we are a global company fighting with local brands. For example, Minas Gerais, it's a huge production of milk. So we need to reflect our strategy with all these challenges, logistics, different taxations, and different quality competitors. So we need to have a huge brand manager to fight with those brands.
Thanks, Hayes. That's honestly, it blows your mind just thinking about the complexity. When I think of the word complex, and then there is the Brazil version of complex, it's a completely different scale, bigger, and dare I say, messier as well. Now, if that's the market, explain for us a little bit about how you manage the revenue growth challenges, the team, the story within there. So, what are the biggest challenges from a revenue growth perspective that you're actually managing today?
For me, we have three. We need to focus in three big things. First, the operational complexity. So, as I told you before, 26 different taxations by different channels perspective. When we cross this, we have a huge volume of data that we need to guarantee to be not just tactical, but strategy as well. So there is a lot of, we say, versions of truth. So we have different teams work with the same amount of data, and as is a lot of data, sometimes we saw from different perspectives. So for me, it's really important to have one source of truth and how to be fast with all these data that we manage. The second is understand where is the real leverage of growth. It's really easy with the data that we have nowadays. It's really easy to understand where is our lacks or where is our opportunity, but how to drive business strategy with those data. It's not just seeing the lacks. It's how to execute this in the shelf. For me, is one of the most important things. And the third, as you guys already presented, talking about pricing. Pricing was here in Brazil was the same. Pricing was pushing us our margins. Pricing was driving our profitability. Just pricing, and understand pricing by consumer perspective, understanding the occasions, understand where the customers are ready to buy that with that price exactly, is really a challenge for us here in Brazil, especially because of the local brands that has a lot of strength to fight with us. That is a global brand. So for me, is this how to link how to be fast with all this volume of data, but not just being fast, but execute this, translate to the sales and the shelf the right proposition for our brands.
I'm working across all three. Now, Mark, you've been working closely with Chase for the last several months now. What do you see as being the biggest opportunity for Danone in Brazil?
I think, Jason, it's really hard to say that there's one silver bullet, right? I think in the past that was pricing, and that's actually where we've gone wrong, right? We've overpriced and taken moved away from the value equation that existed for shoppers before. So I really think now it's about saying, how do we approach the business differently? How do we approach it with a 360 view of all of those growth levers that we've spoken about? How do we manage that operational complexity? And I think that for me is the absolute critical thing going forward. If I just talk about Danone specifically, Hopefully Thais doesn't mind, right? I think we have challenges in distribution in categories. We have challenges where some brands, I won't name them, probably protecting the price hasn't worked. We've probably overinvested in price when actually maybe the challenge is brand positioning or share of shelf. So for me, it's really, no silver bullet. And I think, if we take each of these four growth levers on the screen, right? I mean, price, we know we've probably overstacked that, not necessarily in Danone, but across the world.
Right.
What I think is really clear though, promotion, 30 to 40% of promotions in the UK now, and I think it's probably worse in other markets where technology and RGM is less evolved still, are actually negative ROI on not necessarily delivering sales uplift or the right sort of, let's say, promotional strategic intention. So I think that's really key. It's not to say it's not important. It's just that we've got to do it in moderation, in the right way, with the right intention for the promotion. Second thing, I think we've really got to get distribution right. It's something that over the last sort of 10 years, especially with COVID, has dropped off as a focus, and with new channels that exist, right? So, if you take TikTok Shop, Instagram shopping, and all the new channels, I mean, Thais spoke about iFood and last mile delivery here to try and explain to a UK consumer iFood and Happy, which is a delivery service here, you can get something to deliver to your house in less than 10 minutes. And
Wow.
anything else you can get delivered in an hour. From a television to a $1 onion. So it's a really, incredible service. So distribution in the new world of retail channel is absolutely critical. Innovation, we have to get right as suppliers, and that's really, really critical to, I say, counteract a lot of those new startup brands, mom and pop brands that are really growing online. And then, the last thing, really, that clear purchase reason, and that's again, a strong role that RGM plays as a function is giving a compelling value-driven offer for the consumer. So for me, it's absolutely critical that if you are going to take pricing, what's the benefit of the product behind that for the consumer? So it's really hard to say there is one silver bullet. In fact, I really don't think there is, and I think that's why we've got the challenges we've got today, Jason. So for me, that's absolutely critical to tackle these four, and probably there's another 10 that we could talk about on another
No,
webinar.
I'm sure. I mean, that first one, the price and promo one in particular. I mean, you said it, 30 to 40%, and just again, I have to think about that number, 30 to 40% of promos out there, probably destroying value, not actually creating value, and trade spend being, that second largest cost item on the P&L. It's huge. It's a brave call though, isn't it, to actually switch off a quarter of the promos. But sometimes that's what you got to do. Right, let's move us on. So Taze, maybe back to you on this one. Over the last 12 months, perhaps, if you just sort of reflect on some of the things that you've actually done within the business to get after some of this value. Yeah, maybe just explain a little bit about some of the steps you've been through and what you've worked on as a team.
I think the key shift here was moving from a price driving perspective, linking with all other pillars of our RGM. So since I arrived with my new team, we have been building our RGM structure, talking about mix, talking about promo, talking about contracts, etc. So for me, it was setting the basic, building the foundation, understand the data that we had, and create the governance. So first, governance is key to guarantee a good execution. And then I think we have been building a consumer-centric pricing. So it's not about profitability. So market shares is a key for our GMs as well, a key KPI for our GMs as well. So understand the right proposition and understand our gaps was important, because understand the gaps also from a consumer perspective is important to understand where you're gonna lose. So was the first thing that we did. Second, we rebuilt our investment model. So you can believe that here we were talking about absolute investment. So it was a really a challenge for us. So we have moved from absolute investment to a live rate investment. So as more as we have revenue, more we have investment, and is linking with sellout as well. So talking about sellout is one of the key KPIs that we have made as well. And after build the foundations, understand our investment, how mix can help us to drive value. So I have a YoPro story here. YoPro yogurt is a really margin incremental here, a curative margin. And as soon as we understand the data, we saw even we put a lot of promo into this SKU, we are losing share of volume, share of value, we are losing a lot. So once we understood consumers that they buy yogurt, even it's not in a promotion because the categories is like that, and we understood that were pushing the promo in a perspective that the consumer didn't understand our price. It's 10 reais, it's 12 reais, it's 9 reais, which is our price. And so as we set the right proposition of price, we cancel out of promos of this category. After 2 months, we start gain share of value again. So I think this is a really good example how understand the portfolio, promo, pricing, and mix, and how to leverage all the pillars together for a more profitable and sustainable category as well.
It's a brilliant example. It really is. We were talking about it before the session started, but honestly, it's such a great example of real RGM, if I could call it that, put into action. You had the data, that one thing, you had the information, but then you were brave enough to actually do something with it. And I think that's that's a huge credit to the yourself and the team on that as well. No, great example. Thanks for sharing.
Thank
Um,
you.
so, Mark, maybe back to you for this one. A couple of things that still nag at me a little bit. We don't see enough examples probably of YoPro in our market. Big brands keep struggling to make exactly that kind of call. Why is it so hard?
I think you already used the word Jason, right? It's brave. It's really hard to get off the drug of promotions. Um, you know, even if, when we can talk about data clarity in a second, because I think that's one of the huge enablers to be able to make these brave and courageous decisions. But let's say you identify an opportunity, taking that opportunity, getting it signed off at a senior leadership level. You can manage that with the data that you have. What's actually really hard is building that cultural adoption within the organization. How do you get your cash and carry sales manager, where price for them is the only lever in their head that drives sales, to actually pick up the idea and adopt the idea, and actually have the strength and capability to take that to a retailer and negotiate it, who are also incredibly focused on price. So, resistance to change within an organization is really high in consumer goods businesses, and taking that risk is really critical. And I think the second thing, that data clarity helps really enable that. But again, it's hard because everybody has a different point of view. You can cut and slice 200 different data sources however you want these days. So everything, you can build your own story. In this customer, in this week, in this month, this happened. So getting data clarity aligned across the organization is critical, making sure everybody's using the same data set in the same way, having your data sources together to take a view across multiple growth levers to take a decision is really critical. And then you've got to have the leadership aligned, right? The third thing
Right.
is, if you're going to make that big call, it's scary. Again, turning off that tap, turning off that drug. If it doesn't work, Wait, at least you took the decision in a database way. So
Right, right.
for me, it's really critical. Data enables all of these conversations. It enables that cultural conversation and it enables that leadership negotiation. So for me, data is at the heart of it. Cultural change, however, is much harder to do. So that
Okay.
that's for me why we don't see as much change.
Spoken by somebody who's clearly lived it.
Yeah, exactly. I've lived it not just on promotions, I can tell you.
Yeah, I bet. I bet. Awesome. All right. Now, thank you both. So I'm going to sort of switch gears a little bit now. So we've talked about volume, we've talked about complexity, we've spoken a bit about messy data. So Mark, introduce us a little bit now to what you've built and why you've built it. Explain a little bit more about the Revenue OS platform and how you are working and supporting Thais and her team.
Look, Jason, so Revenue S for me was born out of a pain point, right? It was born out of trying to see the ROI of my investments on a brand, in a channel, in a retailer across the world. So I've been lucky enough to have a career that's, spanned Japan, America, Brazil, Australia, India, Kenya, Iran. Have some fairly interesting war stories, but I think it's really been born out of a pain point. And so Revenue OS, the intention is to try and pull together all of those disparate data sources into one place to give you that 360 view, recognizing that, again, in the past, maybe we had a platform that gave you, a good view of your P&L, and then recognizing you probably had a platform that was giving you a good view of your execution. But the question that I was always asked was, okay, if I increase my share of shelf, does it increase my sales? If my perfect store is at 95% versus 75%, do I get better rotation in that store? And I think that's a conversation and a question that's always been difficult to answer. And so Revenue OS is really intended to try and solve that. Uh, we really, integrate all of your data into one space to give you that 360 view and enable you to answer that question. I think the other thing is recognizing that the speed of the world in which we operate has changed, right? I was recently at the Bain Insurgent Brands Awards here in Brazil, and one data point that really stuck with me in that, Jason, was large companies take 18 months to bring a new product to market.
Yeah.
Small
Wow.
intelligent brands can do it in 3.
Mm,
So we have to be making decisions faster. We have to identify opportunities faster. And so Revenue S, instead of being, a 2-year or an 18-month project, is aimed at, really being able to deliver value and ideas and opportunities for you in 60 days.
okay.
So
And
it's,
Mark,
it's
what
a
about those sort of somewhere in the middle? So the sort of mid-sized companies. They're not startups anymore. They're not huge Unilevers, P&Gs of the world. But what about that sort of mid-sized business? Great brands, not startups. Is this something for them as well?
Absolutely right. I think it's built for them, Jason. So
Right.
for me, that was always the intention is how do you bring top class FMCG capability like Danone have, like Procter have, as you mentioned, and
Mm,
bring that to these companies because they're in that transition phase. They're no
right.
longer as agile as they once were. But they also don't necessarily have the volume, scale, and history that these big FMCGs
All
come. So it's really
resources, frankly. Yeah, yeah,
all the resources,
yeah.
right? So it's really aimed at facilitating those types of companies at a price point that, again, is very much more palatable than your traditional, let's say, large scale tech deployment. So that's really the objective is how do you bring top class FMCG capability into a small to mid-size company that is growing.
Smashing. Okay. And maybe you just sort of explain a little bit about the sort of we talked about at the top of the call. People can't afford to wait 2 years to bed these kinds of capabilities into their business. They need results a lot faster. I know we've been working on sort of 60-day time frame windows before people, within which people can start seeing real results. Do you want to just sort of talk the audience through kind of what that looks like?
Yeah, look, I mean, my commitment with the platform is that it can be up and running in 60 days in your business, right? So, for me, it's absolutely critical. Day zero, we connect, understand your business challenges, but the reality is I need your data. So it's really about pulling in your data, connecting it all, and spending that time to augment and really, let's say, build a quality data platform. A lot of the conversations, again, that you have right now around AI and how AI is the future. But if you don't have fantastic data foundations, you aren't able to move forward with your AI journey. And so for me, a lot of that time is spent augmenting and building the quality of the data. Um, Once that's up and running, once that's done and cleaned, we can pipe that into the platform, and then the platform starts to spit out for you those opportunities. And again, the platform's been built by commercial people for commercial leaders. So it's not a tech project built
Right.
by a tech team. It's a tech project um, that's been built by a commercial team with a tech background. So for me, by day 60, the aim would be I can sit in the office, and actually sit there and pull out opportunities. I mean, one example I can give you, last week I was sat in Thais's pricing committee, and I was able to sit there whilst she was presenting her pricing, and she was getting pushback from various sales leaders. I can actually see live, actually, when they talk about the competition pricing impacting sales volume, I can actually disprove that live for them, which really helps, I think,
Right.
hopefully Thais push her pricing through.
Awesome. I know, Mike, you were keen to maybe we don't have time to cover all the details on the slide. This will be in the deck when we circulate it later. But I know you were also very, very keen just to dispel any myths of what it is and what it isn't, more importantly, as well. So hopefully this slide sort of helps do that a little bit of justice.
Yeah, as you said, Jason, I mean, very, very quickly, it's intended as that 360 view. So, we like to integrate your ERP data, with your Nielsen data, with your execution data, to give you, again, that view of I want to make a decision on how I'm going to invest right now, maybe this month, but then also how I'm going to invest strategically in the future. What I think is, really important to note is it doesn't replace your commercial team. It absolutely should be facilitating your conversations. It should make those conversations faster rather than you asking a question and then taking 24 hours, 48 hours to come back with a response. You can actually do it live and in that meeting, identify if that's a real insight or not a real insight. So it's really intended to facilitate leadership and strategic conversations as opposed to take away your commercial team's capabilities, let's say.
Perfect. Thank you. Alrighty, so let's try and pull all this now together. And if you take nothing else away from today, there's probably three key things that we want to leave you with. In one, obviously, pricing isn't going to grow you in 2026. I think we've discussed and debated that particular topic. It carried us for a long time, but over the last few years, that's eroded. Inflation's cooled, volumes have turned, and pretending otherwise just isn't going to make it out any better. Second point, and you saw it there from Mark and Thais earlier, those four execution levers. So pack architecture, promo ROI mix, and key account negotiation. And if we're honest, and certainly this is reflective of the conversations I've been in recently, probably organizations are probably doing well on maybe two of those. But the recovery is in the other two, and probably starting with those promotions that are quietly losing your money as well. And then the third point is technology solutions, AI, data. It's now becoming more attainable, and for probably the first time in certainly the 30 years I've been around, it's more attainable than it was ever before, particularly for consumer goods companies in that sort of mid-market area. So, 50 million to a billion pound businesses, you can really start to get after this and get that 360-degree view that Mark talked about. It used to be the exclusive privilege of the multinationals, the large CPG brands and teams, but no longer. 60 days, not 2 years, you can really start to get after some of this stuff. Right, now you've all been very patient and let us present to you for the last 40 minutes or so. Now, here's a couple of things that we'd like to offer back to help you. And quite frankly, it's something we don't normally do, but we're offering everybody on this call a complimentary, completely confidential 1-hour RGM clinic. A one-to-one with our very own Mark Jagger himself. Not a demo, not a pitch, but 1 hour of Mark's undivided attention, focused entirely on whatever corner of your own RGM puzzle you're wrestling with. And whether that's pricing architecture, your promo ROI, your mix, your data, your AI readiness, wherever you feel most exposed, Mark will gladly give up an hour of his time to listen and to give some structured advice for you as well, and to be very, very clear, what this is worth. An hour of Mark's time is highly prized. We're giving it to you for free, in complete confidence, no obligation, nothing to buy at the end of it, nothing like that. But you will walk away with a clear outside-in read on exactly where your biggest revenue growth opportunity sits, and a sense of what that 90-day plan could actually look like for you as well. Now, there are only so many hours in a day, far fewer in Mark's diary actually as well. So genuinely, this is a first come, first served opportunity. If you scan the QR code, it will take you to a link to book an hour in Mark's diary. Pick a time that works for you both. And if you're not able to scan while you're on the webinar right now, we will email a link to you all as part of the follow-ups within the next day after today's webinar. All right. So while everybody's busily pulling up their cameras and scanning the QR codes, let's get to your questions. So, Sophia, can I ask you to join us in the virtual room? There she is. Hey, Sophia,
Hello,
how are you?
I'm good,
Hi
thank
there.
you. Are you okay?
Yes, all good, all good. So, Sophia, well, first of all, have we actually had any questions?
Yeah, we've had lots of questions, which is great to see. Thank you everyone for the questions. So some of them have been company specific, which we'll have to do individually. Um, and if you haven't asked any questions yet, but you want to, there's a chance in the survey page at the end, which we'll get to. And if you're watching the recording, you can reach out through the website. So on to the questions. I have printed out a few while you've been talking.
Very good. All right, give us the first one.
So the first one is, how do you identify which promotions are actually destroying value in your business?
So, okay. So how do you identify which promotion actually destroy value in business? Taze, would you mind taking that one? Give us a down-on view of how you handle such a thing.
For sure. Thank you for the question. I think there's three key things that we need to analyze. The first one is the incremental volume. So I think we need to understand the sustainability of the volume of the promo. So for me, it's important is not just looking into the period of the promo, but if the additional volume is sustainable after the post-mortem of the promotion as well. And one of the most important things is to understand the cannibalization of the products between our portfolio as well, not just looking into the competitor's perspective, but looking into the P&L, internal P&L perspective as well. So first, incremental volume, and then linking with the net impact of this into the P&L. And the third one is the profitability. Is not looking to the ROI. No, so do we keep the profitability? This is the third one that is for me really important.
Perfect. Thanks, Taze. That's great. Sophia, give us our second
Thank
question.
you. Yeah, so what does a true 360-degree view of the business look like in practice?
Right, Mark, one for you, I think.
Yeah, I mean, look, very quickly, really is looking at everything. So, we want to look at not only your price and promotions, we want to look at your portfolio, we want to look at distribution, share of shelf, execution. So it's really taking, all the traditional growth levers and really almost doing a zero-based budgeting approach, where you want to take how you're investing and say, how could I reallocate that in a better way. That's really what we want to look at when we look at a 360 business approach, is everything start to finish.
Okay.
Thank
Sophia, another
you.
one?
Which of the four growth levers typically offers the biggest opportunity for mid-sized consumer good businesses?
I think we covered this one already, but go on, Mark. I'll let you give
It's
a
got to
view
be
on that one.
distribution. It's still distribution, Jason. So it's been the same growth lever since probably the start of the FMCG category existed, I don't know, 250 years ago. The only thing is the game's changed a bit, right? So it's no longer just that physical shelf presence. That's still absolutely critical. And I still think it's probably the biggest growth lever for most companies out there. Even Coca-Cola would probably tell you that. But now it's SEO, it's distribution on AIs. That's going to be the new distribution channel that we need to really go after. It's distribution on last mile delivery services. It's distribution on TikTok Shop, Instagram, Shop, etc. So it's really now, how do you get distribution in those new channels that say the younger Gen Z consumers are buying in. But distribution still for me, sustainable, profitable, and builds your base. And yeah, I don't think that will ever be
That will never change.
that will probably never change.
Okay, very good. Folks, I'm mindful of time. So, Sophia, one last question. Pick one from the list if you've still got a few more. One last
Okay.
question.
So the final question will be, what's the first action you'll take in the next 30 days to drive growth?
Ooh, actually, let me take that one. So I would say, being very honest, I think you need to resist the urge to try and do too much at once, right? It's probably the trap we all fall into from time to time. I'd suggest spending the first 30 days on getting an honest read of exactly what each of you, or where you are at with each of the four growth levers that we've spoken about. Then I suggest picking the most neglected one and probably the one with the biggest opportunity headroom. It may not be the most comfortable one to go after, but that's the one I would go after. Put an owner on it, a named owner on it, and set a 90-day goal against it, and then protect that time. So that's what I would suggest people do within the first 30 days. One lever, one owner, one number, and you can absolutely get after that within those first 30 days. Mark, Thais, anything else you'd like to add before we bring the session to a close? I'll take that as a no.
Nah, from my side, absolutely nothing at all. Thanks for the chance to chat today, Jason. Appreciate it.
Very good. Well, listen, thank you both. Mark, Thais, thank you. Genuinely.
Thank you for the opportunity.
Oh no, it's been a great conversation. I've learned a lot of great takeaways in all of this. To our audience out there, thank you all for giving us 45 minutes of your busy afternoons. And I know that's not an easy commit, but thank you again. If you do take one action away from today, and only one, make it this: scan that QR code, get that time with Mark, spend the time, understand, help use Mark's time to help get after some of these opportunity areas within your own business. We'll be back to you all in your inbox within the next 24 hours. Link to the recording. We'll come back with answers to any of the questions that you've kindly raised that we didn't get to. Apologies for that, but we will be back to you over email on that. And final thing to say is the volume isn't actually gone. It's moved, right? So let's go and find it. So thank you, everyone. Have a good rest of your day. Take care. Goodbye.